Yo, what is good, YouTube? We are back with another video. If you guys are not in the free Discord, go join it. It is the first link down below. We're getting close to the 1,000 number. We're like 100 members off. So come join the free Discord and come chat it up, baby. So we're going to be going over the silver bullet entry model. We're going to go over 2 ways to use this model. And we're only going to go over the 10 a.m. to 11 a.m. hour. Now, there is another session for this. It is the 2 p.m. to 3 p.m., but I don't trade afternoon usually. So we're only going to be going over the 10 a.m. to 11 a.m. on the 5-minute chart and the 1-minute chart, right? I have 3 examples pulled up for each, and we're going to do a back testing session for both of these, right? So that will be the next video that I upload, is a full back testing session using strictly the silver bullet entry model, right? So these are the most simple rules. No daily bias, no nothing. You just have to show up for 10 a.m. to 11 a.m. and trade a reversal model, right? So we're not going to get into how to play the silver bullet in a continuation model. We're just going to go over a reversal. So these are the rules that all you need to follow for this silver bullet entry model. Has previous day low or previous day high been taken? Has previous session low or high been taken? Or is there an SMT? One of these three things must happen before you even think of an entry, right? If none of these things has happened, there's no entry model to be taken. Displacement after taking the high or low? Question mark. Entry on the first 5-minute fair value gap, and don't worry, I will go over similar rules for the 1-minute entry. Then stop loss, depending on your risk tolerance, on the second or first candle high or low of the fair value gap created, right? So the most simple rules given. Now let's head into the charts and show you guys some examples of this being used, right? So right here, if we go to the daily chart, has previous day high been taken? Well, previous day high is right here, right? So yes, previous day high has been taken right here, right? Up here at 9:30, we come up, drive above these highs, and then continue lower, right? So this is going to be where your silver entry or silver bullet comes into play, right? So has a previous session high been taken? Yes, we have London highs. Is there an SMT? This I'm actually not sure about. Yeah, there is, right? Right here. This is probably a swing high on the 1-minute chart right here between these 2 candles. So all 3 of those checked marked off, right? Now, 10 a.m. right here, 10 a.m. or 11 a.m. right here. So this is the window, right? Right here is what we're trading. So where's the first fair value gap that's created? 10 a.m. opens up right here. We have 1 and we have 2. So what's your entry going to be taken off of? Premium and discount. Measure out premium and discount right in here. This fair value gap is where your entry will lie. Why not this one? This is not in a discount, right? We're playing a reversal model. We've already taken previous day high. We have London lows sitting down here that we did actually take on this move higher, right? But we have already taken previous day high and all the other session highs, right? So we're playing shorts here, right? So if you want to enter right here in this fair value gap, stop can either be up here or up here. I prefer this candle here, the second candle of the fair value gap. Then you target a 2R right here. So a 2R gets hit, right? You're in some drawdown, gets up here close to your stop, but it never hits your stop loss. Then it runs to your TP, right? And you also have all these swing lows right here, so you could target those as well. And then look for a previous day low or something, right? But there is a reason we didn't take that, but we're not going over that. So the next example right here, right? So what is happening all throughout here? Well, does look like chop, doesn't it? But if we pull up these boxes, have we took out a previous session high or low? Yes, we've taken out Asia and London high, right? So we'll just mark it right here. So we have taken previous cycles high, right? Did we take previous day high? Right here is Monday's high. Yes, we also took Monday's high as well. So previous day high, checked off. Previous session high, checked off. So where's 10 a.m. open up? Right here. What happens at 10 a.m.? Straight displacement lower. Where's your entry? Fair value gap. Or if you want, you can measure out that premium and discount, take your entry in a premium. But we're just going to be entering off the very top of the fair value gap. Stop loss goes above this high. Where do you target? A 2R. Oh, it doesn't quite get there. So this does not quite get to a 2R. Wait, does it? Oh yeah, it does. Okay. So we actually do slap a 2R, and it also lines up with this low. So right there, silver bullet lies in this fair value gap, goes lower, hits your 2R and this low down here. Right? So second example, check. Right? Now the last example is going to be a little different. Right? This is going to be kind of a continuation. Has previous session low been taken? No. So what are we doing here? Well, we're going to have to play a continuation. Do we have an SMT? Where's 10 a.m. open up? Right here. Right? Yes, we have an SMT, right? All these lows right here on the ES are these lows on the NASDAQ. So, is there an SMT? Yes. Inside of what? A higher time frame key level, right? Fair value gap. So, entry here. Stop can either be here, but I prefer here. I'd put it like right around here, so if it wants to tap this order block, it can. Where do you target? A 2R. Right there. Delivers, hits this fair value gap, right? So this is one of the ways you're going to have to identify intraday order flow. Are we respecting bullish PD arrays? Fair value gap, respected. Displacement out of it. Market structure shift right here at this swing high. 10 a.m. opens up right here. We have a fair value gap here, right? Right here, taps into it. SMT displaces higher. Do we continue? Yes, we do. So if you did not get your entry here and you want it at the 10 a.m. hour, right? So we have an SMT, check mark off. Bullish PD arrays being respected. So you can enter here, stop here, target a 2R, right? If you want your entry at that 10 a.m. hour, right here, SMT, fair value gap, displace out of it, fair value gap at the 10 a.m. hour, continues for a 2R, right? So there is the last example on the 5-minute chart. Now, don't worry. I will do a full backtesting session on this, but you guys can see how simplistic these rules are, and if you follow them to a T, if you just go back and look at your charts, you'll be profitable, right? So, oops, let's go back over here. 1 minute, oops, 1 minute. Oh, my caps lock are on. Oh my god, silver bullet. Dude, I am not good at typing right now. Previous session high, previous session low, previous day high, previous day low. It's the same rules, but I don't even know why I'm typing it because it's the same exact rules. But if you don't want to take your entry on the first presented fair value gap, you do not need to, right? So what do we have here at Tuesday, right? We take out Monday's low, take out previous week low as well. Right here is the 10 a.m. candle. So let's go back to the 1 minute chart, go to the 10 a.m. hour. Where is it? So 10 a.m. opens here. 11 closes here, right? So let's pull up dual charts. Remember, down here we have already taken previous week low. So we are expecting at least London highs, right? So we're expecting to go to London highs at least, right? So we're playing a reversal. So we'll just mark off London highs and then go back into the charts, right? So do we have an SMT? Yes, right here at this low, right? SMT throughout here, bullish SMT. Okay, so we do have an SMT. Do we have a presented fair value gap at 10 a.m.? No. Boom, displacement right here. Fair value gap at the 10 a.m. hour. Boom. Entry. Stop loss can be down at this low. Here, on the 1 minute, you might want to have it at the swing low, right? Then you can target these equal highs. 2.8R or London highs. 5R, right? So boom. Now the thing is, you don't have to exit at 11. You just want your entry to be before 11. You want your entry at that 10 a.m. hour. You do not need to exit before 11 a.m. or during 11 a.m. Right? So it runs up to London highs and then it continues the rest of the day. Okay? So the next example. Okay. Right here. SMT. Okay? Bullish SMT. If we want to pull up the ES, right here is that same low. So SMT, higher time frame key level, 1 hour fair value gap, right? Respecting, and then we can target these highs up here, right? So we have buy side. So going down to the 1 minute chart, right? Right here is that SMT. Where's 10 a.m.? Right here. 10 a.m., 11 a.m., right there. Right here's your 10 a.m. hour, right? Now, do we have a lower time frame SMT? Yes, we do. Right here, right? ES does not take the lows, NQ does, right? Okay, displacement out of here. First presented fair value gap that gets tapped into. Now, why would I expect us, come on, why would I expect us, let's get rid of some of this, boom. Why would I expect us to respect this fair value gap and not rebalance this breaker? This is going to support us to continue right here. This breaker, this up close candle. This fair value gap gets displaced through here. I would not expect us to come down here and rebalance this. So right here, you can take your entry. If you do want to give it some wiggle room, you can just have your stop a little ways down here, but you don't have to expect it to rebalance this. So it can be here, but let's just say for the sake of the video, you want it down here. Target, what? Previous day high, right? Monday's high gets delivered. Okay? Right there. Another great example of the silver bullet. Now, last example. I'm not really sure what this is. 10 a.m. Do we have an SMT? Oh, yeah. Okay. SMT right here. So what are we doing? Playing a reversal and rebalance of this candle, right? So let's go down to the 15. Right here. Let's go down to the 1 minute. Oh yeah, nice. Okay, so we have buy side resting here. Why does this look familiar? I might have took this. Oops, not SMT. Buy side. Okay, so there you can also measure out equilibrium. Where's 930? Right here. So we have equilibrium laying out right here of New York session. So you can target this fair value gap. Why this fair value gap? Well, that's the one that is in a premium of 930 to the low of day right now. So we can get rid of that and just target this fair value gap. Right, so we form this SMT during what? The 10 a.m. hour, right? Okay, fair value gap. Right, taps into it right here. You can long here, stop down here, or here, target this high, which is almost a 3R, and then this fair value gap. Now, if you didn't want to try to catch the bottom and try to long here, wait for the second displacement leg right here, right? It's still at that 10 a.m. window. You can long here, stop at the low, target the fair value gap. It's still a 2R, right? So there you go. There are very simple rules to this strategy, and once again, don't worry, I will do a full back testing session on this so you guys can fully understand the silver bullet model, but the rules are very simple. Previous day low, previous day high, previous session low, previous session high, or an SMT. One of those things has to happen before you even think of an entry model, right? So that is going to be the end of the video. I hope you guys enjoyed, and I will see you in another one. Peace.